Let's get a market view also. We are joined by Vinay Rajani, CMT, Senior Technical and Derivative Analyst, HDFC Securities. Hi, Vinay. Afternoon and welcome to the show. All right, so what do you have to talk about the texture of the market currently, important support levels, and even the resistance that the market is facing, Nifty and Bank Nifty to start off with?
Yeah, good afternoon and thanks for having me on the show. So Nifty has already witnessed a more than 1,000 points fall from the recent swing high of 25,670, and now Nifty has reached to the crucial support band, which is there around 24,500 to 24,600. So there is a 100 days EMA today's low, which is around 24,598, which also happens to be the 100-day exponential moving average for the Nifty. So that is also a crucial support. And as we all know, in the month of June also there was a huge consolidation and long consolidation was there, and the base which was there in the month of June for Nifty was around there, and the base which was there in the month of June for Nifty was around 24,500. So 24,500 to 600 zone is a very crucial zone. As we all know that the long to short ratio by FIs in index future has also been into a oversold territory. Yesterday's ratio was 0.17. So they have been carrying long, short positions since long, and this is an oversold number, and anytime soon we can see a covering of their shorts by the FIs in the index future. So yes, after 1,000 points fall, now index has reached to the support zone, and derivative data is also suggesting some oversold scenario. So this is the time to cover your shorts and wait for some stable market. However, the positional trend of the market will remain weak because, as we all know, the lower tops, lower bottom formation is still intact, and the previous swing low was 24,890 odd. So we are waiting for that to be taken out on the upside to confirm the bullish reversal. But yes, at least if not going long, but at least short should be covered at this point of time, because market has reached, Nifty has reached to the strong support, and we cannot rule out the possibility of the bounce back from this level.
Mr. Vinay Rajani, hi Ankur this side. And last time when we spoke, we were discussing the fact have bulls entered into the room, and today also the kind of commentary you are giving, you are saying that we are near support levels. I want to understand now sector wise, few of the sectors which have actually underperformed, particularly in past 1 week, has been IT sector. What is your view? What are the charts suggesting of the stocks there?
Yeah, so basically because of the large cap IT underperformance in the month of July itself, Nifty IT index is down by 10%. Obviously because of the performance of TCS, HCL Tech and the Infosys. So for last 4 consecutive weeks, IT index has been falling from the high of 39,500. Nifty IT index come down to 35,100. So yes, as going by the history, July has been the best month for the IT index, but this is a reverse case this time, because in out of 10 years, this is the reverse case that we have seen a significant underperformance by the IT index. But now, from after falling for last 5 consecutive weeks, from healthy correction, yes, they have also reached to some oversold territory. This is risk reward ratio is not favorable for going short here. We are waiting for some stability to come. If consolidation is there, or if price stops falling from here, then we have a hope of a bounce back in the index, because already healthy fall of 10% in the month of July is quite significant. And I think whatever negatives were to come from the results, it has been already discounted in the prices. So till now, trend has been negative. It is still negative, but we are waiting and we are expecting that anytime soon bounce would come. Whether it will sustain or not, we will decide later on. But trend is weak. But at this point of time, going short, risk reward is not favorable.
So that's a view coming for the indices and the strategy on the market. We are in the middle of the earnings season, Vinay, and right now, as we speak, Varun Beverages, the beverage segment company, has posted the numbers. Now, on the profit front, it did see a 5% upsurge on a year-on-year basis. However, the revenues have gone down. Want to understand your trading ideas, and also if you have a view on Varun Beverages.
Because of the result, today's stock has gone recovered from the lower level. And if I were to purely go by the technical charts, this pattern is known as a flag pattern breakout. So if stock closes here, then it will confirm the pattern. So after some running correction, the stock has resumed the uptrend and now up by 1.5%. And the stock has also surpassed the 50 days exponential moving average resistance last week. So the setup is quite good, recovering from the lower levels and gradually getting strength. So today's low becomes the strong support for the counter. 478 is today's low. That should be kept as a trading stop loss in the counter. Yes, looking at the chart, it looks like that it should extend the rise from here. And in trading, one should have a stop loss of 478.
Okay. Did you give your stock-specific recommendation, Vinay?
So basically, we are bullish on chemical and agrochemical space, and as we the results have been coming out very positive. The resilience in this all stocks in the agrochem and chemical sector has been very good. So Rallis India is one of the stock which we like. Results were quite convincing. Technical setup is quite convincing. So Rallis India can be bought around 378. 379, 370 should be the straight trailing stop loss, and 395 should be the near-term target. The second pick I would pick from the metal space today. Metal has resumed some resumed uptrend and likely to do well in the coming session also. So JSW Steel is looking good on the chart. So 1045 around level one can go long. I would suggest a trading stop loss at 1030. On the upside, I'm expecting a target at 1070.
Rallis India and a metal pack counter JSW Steel on the radar. Vinay, thank you for your views and helping us with the market, both strategy wise as well as stock specific recommendation. Moving across, let's go across to Kanish.